Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So here we are. We came in, the market was kind of flattish. High beta tech stocks were up. They were acting better this week. But it seemed like every single person, including me this morning, wanted to see if that spider's lower range would break. And it played around for about 10, 15 minutes, and then boom. Okay, the market took off because there's a lot of uncommitted shorts here, meaning that people really don't want to short this market. And then when sellers dry up, as soon as you get a bounce, they cover, and then boom, negative 40 on the oscillator, and things lift. And then strong stocks get stronger, and other things stay in line. So the question is, or what I'm going to do on this recap is just go over kind of what's acting better, what's in line, and what's lagging. So this way, we could navigate our lists, our go-to lists on where your money, is better fitted, or where the trades actually could be in your setups. So let's go through it. First things first, let's go S&P Cash. S&P Cash, great thing. Everyone was so negative at the Seeking Alpha conference. Everybody was saying all the dangers and all the risks. But meanwhile, I bet you all of them are still very long. But they all want to look smart just in case something goes wrong. So anyway, here's your 2-year resistance range, which we broke above. And what do we do? All we did is retest that for now. As a trader, obviously we had to watch it just in case it broke. But as a technician, I remember when we were trading up here, we were saying that a test of this broken, trend line to the upside, which was, right here, could be healthy if it gets retested and holds. So here we are retesting, and as of right now, it held. If you look at it in perspective, this is your V bottom after Brexit, after your double bottom earlier this year. So what do you have? You have a low, a higher low, maybe another higher low. Okay, and then you also have a breakout move right here that we held above. And then at this point you had a small little head and shoulders top that wound up meeting its measured move, because you go from the top of this channel to the neckline, and that's where you are. So lots of different ways to measure this out. Okay, this morning, if you break it down on a micro basis, we talked about this 2119. I've been posting the chart all week saying we have a wedge type pattern building, okay, which had a series of lower highs, which we just broke above, and just define support. And I said, well, what are we going to do? Hold above it and try and squeeze into the upper end of the range, break below it, stay below it, and see lower prices, break below it, give you a red dog reversal, then this. So, scenario one where they couldn't push it below, so shorts got caught, and then we ignited back up. Doesn't mean we're off to the races, but we'll see what happens. Close on the highs, and maybe there's a little bit of follow through. Maybe this 2150, which I talked about here, saying, oh, option expiration, there's a lot more puts and calls here, 2150 going across than down here, and maybe the fix is in and it's just for tomorrow, and then we'll see next week. But at this point, a trade's a trade, and if you book it, they can't take your money out of the bank. And real quickly, you go to the spiders. The spiders also, something that we chart every day. I try and put one out on Twitter. It did not break and close below 212.30 to 50. Held higher. Actually, I have 3 higher lows. It's very minuscule, but actually I have here 212.31, 212.50, 212.50. What was this? 212.75. So never made a lower low, and never got below it and stayed below it. So it showed you sellers didn't have any power. And then today we actually closed a little bit above this 2-day range with some strength in technology. So that's where that stands. On Monday, you had a big day in bios. I started talking about it a little bit more this week. I went over it in the Morning Call Express with my Asian friend who gives our morning call recaps and expresses to all of China. Yes, that's why she speaks Chinese, because then she interprets the whole entire thing in Chinese, and it goes over there. So kind of cool that we're out there in China. But basically the bios, here you go. Why was this back on the radar? Because look, right here you had somewhat of an outside day. What's an outside day, Red Dog? That's when you go below a prior low, come back above it, and close above a prior high. That shows you some power. Then the next day, held higher. Not as high as you would have wanted, but did hold higher. Tried to go yesterday and didn't have enough strength, and today closed strong. All in all, you look at, I guess, more of this macro account or macro chart. First trade that we focused on, pretty intently was here when it broke the downtrend. So what did it do? We actually look at it like this. What did it really do? Came back and retested it. Okay, and now we'll see whether or not there's any power in the bios. all in all, a lot of, this morning I drew this descending channel here. Okay, and now all of a sudden it broke to the upside. So now if you want to be long and trail it higher, now you want to put your stop in, 284-ish. And maybe you get some follow through back up to the top end of the range as Hillary is fading a little bit in the polls. And this day was when the bios reversed. That's because everyone thought Hillary was going to win, and she was all over the EpiPen. So we'll see what's next. It's good to know what the market is correlating. Correlations do change, but traders need something to grab onto. So do mutual fund managers and so do hedge fund managers. So, when that happened with Hillary, now all of a sudden Hillary got sick. I don't want to see her sick, or anyone at any point. I'm just saying she got sick a little bit over the weekend. Remember, she fell into the van. Then all of a sudden the polls were different, and boom, IBB's bounced back hard on Monday. So if you knew the correlation there, if you were short, maybe you covered. If you're looking for long, okay, maybe that day you had it, and then technically it held higher. So anyway, that's that. Next thing is Apple. Let's go over Apple real quick. I posted a chart showing you the anatomy of the trade, okay? And, if you missed a lot of this move, which a lot of people did, okay, I didn't catch the second move the way I caught the first move. Okay, remember the first strategy. Here was your first strategy. First strategy was after earnings, you have a big gap here. Okay, if it holds and breaks this descending trend line, boom, you get a move towards 108 to 112. Here is why I said 112, because I was right here. Okay, wound up going to 110.50. It was a great trade. Okay, then what did it do? Okay, for the second part of this trade. Okay, I know it's during a poor market environment, but if you take the noise out of the way, what did it do? One thing first. Okay, it held the earnings gap. So when you hold an earnings gap, that is considered constructive. Does it mean it's a bullish, crazy move? No, but it's constructive. So here was trade number one. Okay, if you remember on Monday, this was Monday, market closed up strong. Okay, so if you took this home, you got paid. Okay, then on this day, you had another gap up. Did it gap up and fail? No. Did it gap up and hold? And this was the day the Dow was down 250 points. So that showed you some power. So if you were in it from here or you were looking to get in along, maybe that was your spot. Then what did it do? It cleared this two-day high, and it also cleared this prior pivot, which if you were short against, you had to cover. Okay, and that is 110.23. Went above it and stayed well above it. Okay, so there was your 1, 2, 3-day move, which I like to be involved for. Day 4, day 5 gets a little tricky. But anyway, lots of signals here. And now, it's definitely overbought, and it's something that's hard to enter as a trader into a move like this because you just had a huge move, but it's also, try being short. I know guys trying to short here yesterday, and if you're still short, you're mad at the world. Apple's done a whole heck of a lot, nothing since 122. So today, early morning, I drew the chart. I gave you the anatomy of what I just said, a little bit more defined. And I said, you know what? Why can't this get to at least here to here before it's all said and done? And if you play it in your own risk. A lot of guys who bought the 105s, they never, it was for September, they never sold it. Some guys who, bought the Octobers and Novembers, are doing real well. And now at this point, we got to figure out a way to enter responsibly if it's going to go to this spot, and it could even go a little bit higher. But right now, it's exercising a lot of power. So that's Apple. Now let's get into high beta tech, because some are acting better than others. We'll go down the list. Okay, we'll see what's acting better than the S&P and in line with technology that's outperforming, or what's just in line, and we need to figure out if it's going to gain relative strength or not. So if you look at the chart once again of the spiders, real quick. Okay, here is a 4-day range. Real quickly, 4-day range, poking its head above, but still below the summer range right here. Okay, so you want to note that, and it's below the 8 and 21 day. So you go to Amazon. Amazon is not leading. Okay, it's okay. All right, it's still hanging in there. Okay, it's still near the highs, but did it get above this prior old high resistance area? No. Is it back above the 8 and 21 day? A little bit. Did it hold the support that I put in my note from this morning with the Redler All Access? Yes. So this is in line. If it were to cross this, okay, looks like it could get a little bit better, all right, and get back towards highs, but not leading. Facebook also, not really leading, okay? Here's the old high. That's containing it right now. Here's your 4-day high. It's still below. It's above the 8 and 21 day. It still didn't get back and retest those Monday's lows, so it's showing some relative strength. It's just there's not a lot of action here yet. So it's not on its way back to highs. So it's still kind of in line with Amazon as far as, and the S&P. One thing that's a little bit ahead of line, okay, I'll show you why. is Google. Why is that? Okay, Google, remember this little trend line here? Well, basically it broke above and then came back below. And then here's your 4-day range. This poked its head up a little bit better. Okay, and still above the weekly low and still above the gap from earnings. So this still, to me, looks good. And at some point, I don't know what the catalyst needs to be, it's going to take out this range and it's going to go. I went back to the well again. I got in a little bit, and I don't know where I'm going to put my stop yet. But at this point, I know next time it goes above this spot and really takes it out, I'm going to try and be in some decent size, because I still think, I don't know how it's going to get there. At some point in 2016, which is what we're in, this stock's going to be over 850. Here's your channel. Here's this, and at some point when it's ready, it's going to go. I should get in some kind of calls and really forget about it. Netflix, not doing a whole heck of a lot, kind of, lagging and not above this little 4-day range, and I don't know what it's going to take, so that's why it's nothing. Okay, then you had some laggard plays, right? Some laggard plays in high beta tech that I said could be worth a look. Listed Tesla. My exact wording was the stock is broken, but a lot of bad news, couldn't go down. See if you can get above this pivot for a 1-day squeeze for cash flow. What was that? Read back in the note. You'll see this is it. This doesn't look like a whole heck of a lot, but it was up $3 or so. When did it trigger? When it went above this and some shorts got squeezed. Why did shorts get squeezed? Because everyone was pressing the lows and it couldn't go below it. So that was a laggard trade. Okay, it's something that I don't condone, or I don't really say you should do that often, but every now and then, it's worth something, and maybe it gets up to this spot, or maybe not. But this was a decent trade today. Then you go to the new issues. The new issues are, kind of keep spurting, but there's not a lot of power there yet, and they're still basing. Does that mean it's game over? No, it just means that there's not a lot of power, and you have to be a bit careful until there is, and you have to figure out whether or not you want to sit in it. ACIA still has this lower range, so not leading this week. Obviously it led all the way from down here, but not leading this week. If it were to break below this, a little bit of trouble. If it starts to get going above this range, then maybe it pops back up to the upper end. So you want to see what happens here. But at this point, it's in the lower quadrant. Okay, here is your upper, here is your middle, there's your lower. So you always want to be a little careful, when you had a stock that had such a big move like that. Twilo also, volume's just not there yet. So when the volume's not there yet, you got to be careful. Okay, it's at the lower end of this quadrant. At some point, if this were to take this out with authority, maybe it gets back to the upper end. But until then, be small or avoid. Okay, or test it very small and wait. LN getting tight, still hasn't done what I think it's going to do later or at some point. But here you go. At some point, if it gets above this 45.50 with heavy volume, then it's back in play and going. If you're long versus 21-day, you almost got shaken out a few times. I got shaken out on this day. I'm not back involved, but at some point, I know that if it starts getting above this on volume, I'm probably going to be chasing it. And then I still think at some point, whether it's in the next week, the next month, this gets taken out. So it's either you're cheating for that, or you're waiting until it gets over this and then gets over that, and you're going to trade it along the way. But it still looks okay. MEDP, what's that doing? Very sloppy, not much there. GWPH, I got to give it to Todd Harrison. I'm going to give him a shout out right now. He's been all over this fundamentally, technically. I know that he believed in this company the whole way down, boom, and then he had a lot, and then, I'm not going to talk about his position, but anyway, you had a gap up, then it held the gap, gave you a technical push here, and then it came in. Remember, we started buying those $85 calls. Unfortunately, during the corrective phase about a week or two ago, I got rid of them. Didn't catch this, and now technically it's hanging out above this, and seems like, at some point, it could go a lot higher. Every lots of FDA approvals, and drug really works, et cetera, et cetera. If you believe in something and you stay with it, and there's every now and then you get a special name, and this one has been good to some people, and hopefully it's been good to you. And Todd, I know, gave out a research report on Twitter or something like that, and you actually was when it was low. But anyway, good for him. He's all over this, and hopefully it works out, and works out for people that need the actual drug from here. There's a little guy I think that also moves somewhat with it. This is Zion. It's a little different, obviously. Everything's always different, but it's hanging in there. And if this can get above this spot, maybe that could potentially go. Keep your eyes on it. Some other guys were talking about this Ziop today. What did it do? A little day one. It's been battered and bruised. I don't know if it's going to fail after that. But little wake up. Actually, it's a high risk play, so whatever. GLD. Still lagging, still, working its way down to the lower end of this channel. I'm not sure what's next here, but it hasn't been a trade to the upside. I've been cautionary on the GDX ever since it broke the 8 and 21 day and broke the intermediate trend line. At this point, it's trying to hang in there. I'm not sure what's next here, but I guess it's okay as long as it holds this, but I would think it's pretty vulnerable. Still, little head and shoulders top pattern building. So you'll see if this is in control and if it breaks below this to get down to the 200-day. All in all, this was your nice oversold bounce trade. It tried here and fell, tried here. It's not getting much traction, but we'll see if this is like a double bottom and continues. It'll have to blow this out to get rid of this head and shoulders top pattern, so it's lost some time, but I'd be careful. What I did today was just a flyer for options. The TLTs have been battered and bruised. About a week ago, I talked about it breaking the range below 138.50. So just as a flyer for very cheap paper, I bought a little calls for tomorrow, but also a little bit more calls for next Friday because you have the Fed and it's been oversold, and thinking maybe you get a little push up before then. I usually don't do stuff like this, but I figured, here's when the range broke to the downside. Right there, boom. Okay, that was your fake out, and then here was the range break to the downside, and now it's into some big support above the 200-day. So bought a little bit of calls for tomorrow, which is like a lottery ticket, which I expect to go worthless. But maybe for next Friday, all of a sudden you get a gap fill up to here, okay, and that would be wind up being a nice trade because it's short-term paper, and it's next Friday, obviously, with all the volatility that's going to hit. So anyway. When I don't love the trade, and obviously when I'm in calls, that means I don't like the way the thing trades, and it can happen at any time, and it's news-based. So it's like a concept, and risk is premium paid. When I'm in the stock, usually it's because there's a reason and there's a technical pattern, and I feel comfortable. I screwed up on this win, trying to be perfect. This was a great trade for a lot of people. It was in my 2016 note on the #1 play for the year. This was your first objective, got there. 40% congratulations. It definitely paid for the few $100s you paid for the note to get my 12 picks. And then halftime, we came up with another strategy on it to get above this 105 to get to to fill this gap right here, and it's on its way. We all bought a lot of calls right here, thinking it was going to happen then. And then when this little trend line broke, like a jerk, excuse my French, I sold the options, and they were dumb because I had October options. It's only September 16th. Thinking that I'm going to save myself some money instead of just getting in the play, giving yourself some time, for it to work out. And now it's all of a sudden above here. I don't have options, and it's going to probably go without me, and I'll learn for next time that if I buy options a few months out for a particular move versus trying to time it perfectly, I'm not going to nickel and dime it, and try and save money, because if you get out of it, and you don't get back in it, because I was staring at it. I almost got right back into it right here, because you had this gap up, and then I was figuring, maybe it goes sideways and holds and goes, meaning like here's your gap up. Went sideways, I was going to buy the options back here, and they would have been cheaper than when I sold them there, but I missed my price that day, and now look at that. So again, if you go out and you buy options for a concept play, 2-3 months, if technically short term, it doesn't do what you think it's going to do, don't try and save money. Your risk is premium paid. That's your bigger intermediate swing trade versus your active account and your swing account. Because I have an active account, I have a swing account, I have an option account, I have a 529, I have a 401k, I have a whole life insurance policy. All these things are my financial well-being, and you have to know what to do in each one of them and then put them all together, so this way, you can keep managing your, financial health, like your mental health or your physical health or your whatever health. Anyway, as you can see, I'm going a little, mental health today. It is Thursday. My dad's birthday. Happy birthday, Papa. I sent, you could see I put a picture of us on Facebook if you're with me on Facebook. And tomorrow actually is, how many years? It's Stephen. For those of you that know me that read The Modern Trader, my friend Stephen, who passed away of leukemia. He was 30 and he would be 43. 13 years. He's been up in, I don't know where he went, but anyway, he was a great guy to his friends. And just know that life's too short, and do what you like to do, and give a kiss to your loved one at home when you go to sleep, and don't go to sleep in a fight and all those things, because all those cliches, are cliches to some until something drastically happens. And while things are good and happy times are here, make sure to stop and smell the roses, because sometimes, they're not as good as you would like them to be, or if they're in bad times, bad times lead to good times. I won't be on the video tomorrow. I don't do a morning call or a recap on Fridays. I will be in Short Hills trading, so you'll see me on the VTF. I'll do a few tweets here and there. It's option expiration, and we'll revisit and regroup next Monday. So have a great weekend, but I'll be in touch tomorrow. Bye-bye.